The cryptocurrency market has always been a playground for both innovation and speculation, where fortunes are made and lost overnight. One of the most recent examples of this phenomenon is the sudden rise of Ren Sheng coin, also referred to as Binance Live coin by its online community. In just a short span of hours, this obscure token surged by hundreds of % in value, catching traders off guard and igniting a storm of conversation across social media platforms. For many, this dramatic price movement immediately raised a critical question: is Ren Sheng coin the next great crypto opportunity, or is it just another orchestrated pump and dump scheme waiting to collapse? To understand the answer, we have to look closely at the factors that caused this explosive rally, the structure behind the project, and the psychology of the investors fueling the hype. Ren Sheng coin operates on the Binance Smart Chain (BSC), a network that has become a popular home for meme coins due to its low transaction fees and fast confirmations. According to early market data, the coin's price spiked more than 600% within a single day, with rumors circulating that it was somehow connected to the Binance ecosystem. Some crypto forums even speculated that it had appeared on Binance Alpha, a testing or experimental trading environment, which many investors mistook as a sign of official endorsement. That perceived link to Binance, one of the most trusted names in the crypto world, created a surge of credibility among retail traders. The name, which loosely translates to Safe Life or Binance Life, amplified the illusion that this project might be backed by the exchange itself. But in reality, there is no verifiable evidence that Binance or any of its subsidiaries are involved with this coin, and that's where the first red flag emerges. A pump and dump in the crypto market typically follows a predictable pattern. A small or newly launched token with minimal liquidity is artificially hyped through social media, influencers, and paid promotions. Early insiders accumulate large amounts of the token at very low prices. Once retail investors begin buying in due to fear of missing out FOMO, the price skyrockets. When it reaches a peak, the early holders dump their positions, selling their coins to latecomers who believe the rally will continue. The price then crashes, often wiping out 19% of its value within hours or days, leaving most investors with heavy losses. When we compare this pattern to the trajectory of Ren Sheng coin, the similarities are striking. The project had no white paper, no visible development team, and no practical use case, yet it was able to achieve massive growth purely on social excitement. This suggests that much of its rise could be driven by short-term manipulation rather than organic demand. Looking at on-chain data and available information, Ren Sheng coin shows characteristics common in speculative tokens. Liquidity pools appear thin, meaning even moderate buy or sell orders can cause large price swings. There is also no record of a formal audit of its smart contract, which raises concerns about potential vulnerabilities or even malicious code that could allow developers to alter supply or drain liquidity. The absence of transparency regarding token distribution is another major warning sign. We don't know who holds the largest share of the supply or whether these wallets are linked to insiders. If a small group of addresses controls a significant portion of tokens, they can easily manipulate price by coordinating trades, fueling the illusion of rising demand before exiting at the peak. Despite these warnings, it's not surprising that many investors still jumped in. The psychology of meme coins is rooted in emotion rather than logic. Traders are drawn by the idea of turning a few dollars into thousands overnight, the same dream that powered early Dogecoin and Shiba Inu holders. Social media adds fuel to this fire, spreading screenshots of incredible gains and amplifying the sense of urgency. Influencers often join the wave, intentionally or not, by discussing the token in viral posts and videos. Within hours, a community forms around the hype, complete with memes, hashtags, and slogans about financial freedom. This social energy creates momentum, and the market reacts accordingly. However, just as quickly as this excitement builds, it can collapse. Once the initial buzz fades and profits are taken, volume dries up, and prices begin to fall. For Ren Sheng coin, this cycle could unfold in a matter of days rather than months. From a technical and fundamental standpoint, there is little evidence that Ren Sheng coin offers lasting value. No technological innovation, decentralized utility, or long-term business plan has been announced. The project's online presence is largely driven by speculation, not development. Without a working product or roadmap, sustainability depends entirely on community enthusiasm, a volatile and unreliable foundation. In financial markets, such dependence on emotion rather than fundamentals is the hallmark of a pump-and-dump environment. The coin's meteoric rise in such a short time, without clear cause or progress, supports the theory that this was a deliberate liquidity play, possibly orchestrated by insiders who took advantage of the meme coin trend. However, to be fair, Not every sharp price increase is the result of malicious intent. Some meme coins start as jokes but evolve into legitimate projects through community dedication and strategic pivots. Dogecoin, for instance, began as a parody yet gained real-world traction due to its community and high-profile supporters. For Ren Sheng coin to follow that rare path, it would need to establish transparency, announce real-world use cases, and open-source its smart contract for auditing. It would also need to lock liquidity to ensure investors that the project isn't a rug pull. So far, none of these steps have been taken. The developers remain anonymous, and the ecosystem surrounding the token shows little sign of professional structure. Without these assurances, it's difficult to view the surge as anything other than speculative mania. Another major clue pointing toward a pump-and-dump structure is the pattern of social media engagement. When a token experiences genuine organic growth, discussions tend to focus on features, utilities, partnerships, or long-term goals. In contrast, the conversation around Ren Sheng coin is dominated by price talk phrases like "moon soon," "next 100ers," and "Binance listing soon" flood comment sections and group chats. This type of dialogue reflects a speculative mindset rather than genuine investment analysis. Moreover, the token's rise coincided with heavy shilling activity across Telegram and X, where newly created accounts spam promotional content. This level of coordinated hype typically suggests a marketing campaign designed to inflate demand artificially. When assessing whether a coin is a pump or dump, one of the most important factors to consider is liquidity control. If developers retain access to liquidity pool tokens, they can withdraw funds at any time, leaving holders unable to sell, a situation commonly referred to as a rug pull. Early reports indicate that Ren Sheng coin has not publicly confirmed its liquidity lock status. Without verifiable proof that liquidity is secured for a fixed period, investors face enormous risk. If the creators decide to cash out, there would be no recourse for those left holding worthless tokens. The same applies to token supply control. Without renouncing contract ownership, developers could mint unlimited tokens, diluting the market at will. Given these points, it becomes evident that Ren Sheng coin's explosive price movement is most likely a pump, a coordinated effort by early holders or promoters to generate short-term hype and profit. Whether or not this will be followed by a complete dump depends on how the community reacts once early profits are taken. If new investors continue buying in, the decline might be gradual. But if sentiment shifts suddenly, the collapse could be sharp and devastating. Historical patterns in similar meme coins, such as Squid Game token or SafeMom, show that once the selling pressure begins, recovery is almost impossible. Still, some traders argue that volatility is the essence of opportunity, that even if a coin is a pump, it can still be profitable if timed correctly. This perspective is not entirely wrong. Skilled day traders and risk takers can exploit these short-term surges for quick gains. However, this requires perfect timing and emotional discipline, something most retail investors lack. The danger lies in the illusion of control, the belief that one can exit before the dump occurs. In reality, market manipulation and algorithmic trading make it nearly impossible for the average person to beat the insiders. What starts as a dream of easy profit often ends in regret and financial loss. From a broader perspective, Ren Sheng coin symbolizes a recurring cycle in the crypto space. Each new wave of speculative tokens captures the same emotional triggers: greed, hope, and fear of missing out. Investors forget the lessons of previous crashes and rush into the next shiny opportunity. The ecosystem rewards early movers and punishes the rest. This repeating pattern not only undermines confidence in the market but also attracts regulatory attention. Governments and financial watchdogs are becoming increasingly wary of meme coins that behave like unregistered securities or outright scams. If Ren Sheng coin's price collapses and investors suffer significant losses, it could draw scrutiny from authorities, further damaging the reputation of the meme coin sector. To protect themselves, investors should always perform due diligence before committing funds. In the case of Ren Sheng coin, several precautionary steps are essential. Verify the smart contract on Skaknon, check if liquidity is locked, research the developer's credibility, and analyze wallet distributions to detect whale dominance. If a small number of wallets hold the majority of tokens, that is a clear warning sign of potential manipulation. Moreover, investors should set firm stop-loss limits and avoid emotional decision-making. Treating such coins as entertainment or high-risk speculation rather than investment is the only sensible approach. Ultimately, whether Ren Sheng coin ends as a pump or dump depends on transparency, sustainability, and community evolution. If the team behind it takes steps toward legitimacy by releasing a white paper, locking liquidity, and creating tangible use cases, it might transition from a speculative bubble into a stable community project. But given the current lack of transparency and the overwhelming signs of coordinated hype, the likelihood of it being a classic pump and dump far outweighs the chance of genuine growth. Investors should view this token not as an opportunity for long-term wealth but as a short-lived phenomenon fueled by social media frenzy and speculative greed. In conclusion, Ren Sheng coin is a textbook example of how quickly hype can create and destroy value in the crypto market. Its rapid rise may appear impressive, but without fundamental support, every pump eventually leads to a dump. For some, it may offer quick profits. For most, it will serve as an expensive lesson about the dangers of chasing hype in an unregulated, emotion-driven market. The golden rule applies here more than ever: never invest more than you can afford to lose. In the unpredictable world of cryptocurrencies, it's better to miss a pump than to be trapped in the inevitable dump that follows.